Welcome to the Deep Dive, your shortcut to being genuinely well-informed fast. Today, we're plunging into a really big question, one that's not just making headlines, but causing some serious waves in the market. Is IonQ a company right at the forefront of quantum computing, poised for an incredible quantum leap? Or could it be looking at a dangerous collapse? I mean, we're talking about a stock that's surged an incredible 423% over the past 12 months. Just wow. So our mission here is to dissect a whole stack of sources. We've got the dense financial reports, the numbers, but also the lively community discussions buzzing with what might happen next. We're going to pull out the core insights specifically for you, our listener, so you can decide if IonQ fits into your investment thinking. Is this a speculative buy, maybe? Or is it potentially a falling knife in this very volatile, very new tech space?
It's a fascinating challenge, absolutely. And for anyone who's catching up, IonQ is one of the main pure-play companies. They're focused entirely on developing and commercializing general-purpose quantum computers. Their core technology, it revolves around something called trapped ion technology. Now, these aren't your everyday computers. These systems are built to tackle incredibly complex problems. Problems that are, frankly, beyond what even today's best supercomputers can handle. Think about things like accelerating drug discovery, financial modeling, developing revolutionary new materials, that kind of scale. And what makes them accessible, or more accessible anyway, is they often offer these capabilities through the cloud, leveraging major platforms like Amazon Web Services, Microsoft Azure, Google Cloud.
Right. So they're making this cutting-edge tech available through familiar channels. Let's start with the bull case then, the arguments for that quantum leap. If we dig into the numbers first, what does their balance sheet actually tell us about IonQ's financial stability right now? That's often key for these early-stage, capital-hungry companies.
Yeah, it's an excellent place to start. And what's, quite interesting here is that IonQ actually has a remarkably strong balance sheet, especially considering their stage of development. Get this, zero total debt. That's a pretty significant advantage in this field. Their total shareholder equity, a solid $765 million. Total assets are around $850.1 million. And crucially, as of March 31, 2025, IonQ had a substantial cash balance, $697 million. You might see some older reports mentioning maybe $588 million, but the latest figure is indeed higher, $697 million. That kind of capital gives them a very strong foundation. It suggests, based on their current free cash flow burn rate, a runway of more than 3 years. So the financial health, it definitely positions them well to invest in growth without, immediate pressure breathing down their necks.
Wow, $697 million in cash and no debt. That is incredibly strong for a company at this point, especially given how expensive quantum R&D is. But, in a sector where you expect massive R&D costs for years, how much of that cash is really free for aggressive growth versus just, keeping the lights on long term? And beyond the pure financials, what about their tech? Their market position? Are they genuinely a leader, like some sources claim, or is that just, marketing speak?
That's a fair point about cash deployment. It definitely highlights the long game here. Now, on the tech side, their differentiation is pretty clear. IonQ's core is this trapped ion quantum computing. It lets them operate reliably at or near room temperature. That's a big deal compared to some major competitors like IBM and Google. Their superconducting systems often need these incredibly expensive, complex cryogenic environments. Super cold.
Right, the super cold ones. So IonQ avoids them.
They do. And the implication is, lower operational costs, simpler infrastructure, and potentially a quicker path to actually scaling up commercially. Plus, their architecture offers what they call superior qubit connectivity. Basically, each quantum bit, or qubit, can talk directly to every other qubit. That's crucial. It means you can run more complex calculations with fewer qubits, which is a massive advantage when stable qubits are still so hard to create and manage. By the end of 2024, their Forte enterprise systems hit 36 algorithmic qubits, or 8Q. That's a key performance metric. And they have this really ambitious roadmap laid out. They're planning for the next system, Tempo, to hit 64 AQ this year, 2025. Then they're aiming for 256 AQ in 2026, 384 in 2027, and a whopping 1,024 AQ in 2028.
1,024 AQ. That sounds like a huge leap.
It is. And look, this isn't just numbers on a slide. It's the core of their value proposition. The market is essentially betting they hit these targets, betting that they turn this science into real commercial capability. So any slip up on that roadmap, that becomes a really critical signal for investors. Market position-wise, as of Q1 2025, they had technically a 99.29% market share based on revenue among the publicly traded pure-play quantum companies.
99.29%. Sounds amazing, but like you said, pure play. In such a tiny market of public pure plays, how much does that really tell us about their standing against, say, Google or IBM, who aren't pure play but have, colossal resources? And speaking of the big picture, this Q-Day threat, we've heard whispers for years, but now it feels like a real, almost immediate crisis. How exactly does this shift and the government stepping in suddenly make IonQ seem so valuable beyond just the usual cybersecurity players?
That's a really sharp point about the market share context. Yes, it shows their lead among the dedicated startups, but the real fight involves the giants. As for Q-Day, yeah, the recent surge in quantum stocks, including IonQ's massive 423% run-up, isn't just about the tech progress. There's this powerful, urgent cybersecurity crisis underpinning it, mandated by governments. Q-Day, that hypothetical moment when quantum computers can crack today's encryption, it's moved from theory to basically an operational emergency footing. You had NIST, the National Institute of Standards and Technology, releasing post-quantum cryptography standards just last August in 2024. Actual blueprints for defense, and the White House estimates the U.S. federal transition alone will cost $7.1 billion between 2025 and 2035.
Wow, $7.1 billion.
Right. Now, a lot of that cash flows to cybersecurity firms, obviously, but this urgent government validation, it fundamentally changes the game. It transforms pure-play quantum companies like IonQ from, speculative science experiments into strategic national assets. It's a huge shift in perception and arguably valuation drivers.
Strategic national assets.
Okay, so IonQ isn't just going it alone here.
Yeah.
To really capitalize on this and grow, they must be building alliances, right?
Yeah.
How are they working with others? Are they playing nice in the big tech sandbox?
Oh, absolutely. Strategic partnerships are vital, and they're definitely leveraging them. IonQ uses cloud partnerships with the big players: Amazon, Microsoft Azure, Google Cloud. That dramatically expands their reach, makes them accessible. They've also been active with acquisitions. Notably, they bought Quivitech's operating assets for about $22 million and took a majority stake in a company called ID Quantique. These moves really strengthen their capabilities in areas like quantum key distribution, that's super secure communication, and quantum repeaters, which help extend quantum communication range. Secure comms tech, basically.
So buying expertise in IP. That's exactly.
Yeah.
And expanding their intellectual property portfolio significantly. They got 118 quantum networking patents from Quivitech, over 400 from ID Quantique. Beyond that, they've got partnerships with AstraZeneca and ANSYS, focusing on drug discovery and simulation. They're integrating with NVIDIA's CGDA platform for AI work. And they landed some significant government contracts, too, like $54.5 million from the U.S. Air Force Research Lab for quantum computing, another $21 million for quantum networking. It's a pretty robust network they're building.
Okay, that's a compelling picture for the bulls. Strong finances, unique tech, key partnerships, and this huge national security tailwind. But like with any bleeding-edge tech, there's always the other side. Let's unpack the risks. What are the major alarm bells ringing about IonQ's valuation and its path to actually making money? Is there a real risk of collapse here?
And this is where the story gets, well, much more complex. It's the critical counterpoint investors have to understand. IonQ's valuation is, let's be blunt, sky high. Its trailing 12-month price-to-sales ratio, the TTMPS, is sitting at an absolutely eye-watering 193.16.
193 times sales.
Yes. To put that in perspective, investors are paying almost 200 times the company's current annual revenue for each share. That just dwarfs peers like D-Wave, which is around 35, or even a giant like Microsoft at about 23. And it's over 50 times higher than the average for the computer hardware sector, which is like 3.8.
So the market is pricing in perfection. Decades of growth.
Pretty much. This kind of valuation isn't based on today's reality. It's a massive bet on the future, implying the market expects exponential growth and profitability that's, well, potentially decades away from where they are now. Because despite that robust revenue growth, they went from $2 million in 2021 to $43.1 million in 2024. The company reported a significant TTM net loss of $324.31 million, or $331.6 million for the full year 2024.
Big losses.
Big losses. And critics point to a high cash burn rate. Some sources mention around $40 million per quarter. Management themselves have even warned about a 35% increase in adjusted EBITDA losses for 2025. That signals a clear trade-off. They're prioritizing aggressive growth investment over showing near-term profits. And some sources also claim the company has flat year-over-year revenue guidance, which, if true, would be a major concern given that valuation.
Okay, that valuation is definitely something. I've also heard concerns, like you touched on, that genuinely useful quantum products might still be decades away. Is this just hype getting way ahead of reality, or is it a real threat to IonQ's commercial viability, especially with that cash burn?
That's a very real and persistent worry, often voiced by quantum researchers themselves. And it's crucial to weigh. Some argue that, look, none of these companies have anything close to a truly useful product for widespread commercial use yet. They suggest practical, impactful applications are still decades away. The claim is that current sales are often novelty buys, or maybe research institutes just playing around with the tech, paying for compute time occasionally. And they also say these early quantum computers are often down for maintenance most of the time, which, hits the idea of reliable recurring revenue pretty hard.
Down for maintenance. Not great for cloud services.
Not ideal, no. And then there's the dilution issue. IonQ recently announced a $1 billion equity offering.
$1 billion on top of the cash they already have.
Exactly. Now, obviously, that extends their cash runway significantly, but critics see it as potential stock dilution. They ask, why raise so much more cash when you already have nearly $700 million, unless your burn rate is really that high or you foresee needing even more down the line. And the stock itself, it's historically been incredibly volatile around earnings. We're talking swings of over 10% in a single day. Like after their Q4 2024 results missed expectations, the stock dropped almost 34% in just 4 days.
Ouch. So, high valuation, big losses, questions about real-world use soon, potential dilution and volatility. That's quite a list of risks. What about competition? How fierce is it? Are giants like IBM and Google really a threat to IonQ's specific trapped ion niche? Or is this market big enough for multiple players, maybe even multiple types of quantum computers?
The competition is definitely fierce. That's a key risk factor you can't ignore. IonQ isn't just up against other pure plays like D-Wave. Critically, they're facing off against the tech titans, IBM, Google, Microsoft. These companies have, well, almost bottomless pockets for R&D, huge research teams, and they're building their own quantum platforms, both hardware and cloud services. For instance, Google unveiled its Willow quantum chip late last year, a big step for their superconducting tech. IBM is also focused on superconducting systems, and Microsoft. They're investing heavily in competitors, including Quantinuum, which also uses trapped ion technology, but with a different approach.
So even within trapped ion, they have serious competition backed by Microsoft.
Right. And some critics have even suggested that if Microsoft's recent claims about a quantum breakthrough are real, it could be, and I quote, bearish for the entire IonQ approach, and potentially even dead for the company. That's pretty stark language.
Wow. Dead for the company. That's intense.
It highlights the stakes. Look, the market is still very early stage. Widespread commercial uses are limited. We don't know which technology will win out or if there will be multiple winners. And all current quantum systems are still quite error-prone and incredibly expensive, limiting their use outside very specialized niches right now.
Okay. So we've navigated the exciting potential and some pretty significant pitfalls. Where does this leave someone considering IonQ? What's the overall vibe from analysts, and what should we, the listeners, really be watching for to gauge where this is headed?
Right, let's synthesize this. Wall Street analysts currently have IonQ rated as a moderate buy. That's based on 11 ratings, 7 buys, 4 holds, and notably 0 sells. The consensus price target is around $45. As of August 1st, 2025, the price was about $38.14. So that target suggests roughly 18% upside. But, and this is important, those price targets vary wildly. The high is $70, the low is $30. That wide range really reflects the huge uncertainty and disagreement among analysts.
A $40 range on the price target. Yeah, that says a lot about the uncertainty.
Exactly. And the stock's day-to-day performance, it's still highly volatile. It seems driven more by overall investor sentiment, company announcements like hitting a tech milestone or a new partnership, rather than by steady, strong earnings growth, because that's not there yet. Key things to watch for. Definitely continued progress on their AQ roadmap. Hitting those targets is non-negotiable for the bull case. Also, new strategic partnerships, any positive earnings surprises, and crucially, any real evidence of broader quantum adoption beyond just research labs. Government funding news is also key. On the flip side, delays in research, financial results that disappoint, or as we discussed, major breakthroughs by competitors like Google or Microsoft or Quantinuum, those could send the price down fast.
Given all that complexity, what stands out to you as the single most critical factor, the make or break issue for IonQ's future?
The single most critical factor. I think it has to be the timeline to truly useful commercial applications. The whole quantum computing market is still years, maybe even a decade or more, from mainstream adoption. IonQ's massive valuation today is built almost entirely on the assumption that significant commercial breakthroughs will happen within that time frame, maybe sooner. So, To sustain its momentum, IonQ needs to show more than just higher qubit counts. They need to demonstrate consistent, recurring revenue streams from actual commercial use cases and show a clear path towards managing costs effectively, not just relying on one-off contracts or government funding. Without those real commercial breakthroughs materializing relatively soon, even that strong balance sheet can only prop up such a speculative valuation for so long.
Right. The clock is ticking, in a sense, for the reality to catch up with the hype and the valuation. So for you, the listener, wrapping this all up, what's the ultimate takeaway for thinking about a stock like IonQ? Yeah, I think this deep dive really paints IonQ as a textbook case of a high-growth, high-risk, speculative investment. On the one hand, yes, strong balance sheet, cutting-edge tech with that room temperature advantage, and this undeniable boost from the whole Q-Day national security angle. But on the other hand, you have that sky-high valuation, significant ongoing losses, fierce competition from giants, and this fundamental question mark over when truly useful, widespread commercial products will actually arrive. Some experts still say decades.
It really feels like stepping into a quantum world, full of potential and uncertainty. So what does this mean for you as an investor? Well, IonQ could offer exposure to a potentially world-changing technology. It might reshape entire industries. But investing in it demands a very high tolerance for volatility. You need a well-defined risk management strategy. Diversification is key. And remember, managing your risk through careful position sizing, that's absolutely crucial with speculative plays like this, especially ones so far ahead of their proven commercial reality.
And maybe this raises a final, broader question for you to think about. In a world where these emerging technologies seem increasingly driven by geopolitical forces and national security needs, maybe even more than pure commercial viability, how should investors recalibrate their whole understanding of value and risk? That's something to mull over as you navigate these really exciting but definitely uncertain markets.